You are in for a treat. Imagine this. You start as a bank teller, and fast forward a few years, you're a top producer, and a few years after that, you're a mega producer. By mega producer, I mean you're funding over $100 million per year, 20 plus units per month. And your pull through on that business is 80%. That's right, an 80% pull through. And you don't believe that you should pay referral sources for their business. In fact, your belief in your practice is they should pay you. If this is something that would benefit your business, if this is the type of professional you would love to become, then you are in for a treat, because I have a special guest joining me today to tell his story and to give away some of the secrets inside of his personal playbook. Check this out. Ladies and gentlemen, boys and girls, children 18 plus. You are tuned in to Loan Officer Podcast with me, Dustin Owen, and a very special guest. This dude flew to Orlando, Florida, all the way from Raleigh, North Carolina. He is a $100 million producer. He is a 6-time Ironman finisher. He is a girl dad to 4 daughters, and when he's not crushing it in the mortgage business, you can find him hanging out by his pool, at the beach with his family, or better yet, up in Kentucky, sipping and tasting bourbon with the boys. He is my friend all the way from Town Bank Mortgage, the one, the only, Phil Jawny. Phil, welcome to T-Lop.
Thank you for having me.
I'm stoked for this.
I am too. I was so excited on the way down here. I just thought, wow, what a great opportunity to come hang out with you. We got to spend time together at the Town Bank conference, our sales conference.
We did. That's where you and I met. So we want to give a shout out to Taylor.
Yeah,
right?
Shout out Taylor.
Yeah, shout out Taylor Malbin and the entire marketing department at Town Bank Mortgage, one of the top lenders, if not the top lender in the state of Virginia. Obviously, you all cover more than just one state, but that's headquarters. And I was so fortunate that earlier this year, I was invited to come up there and be a part of your sales conference, where I got to interview you on the main stage. I got to give a keynote. I got to do a breakout for the branch managers and really get ingrained in y'all's culture, which, by the way, I said this coming back from the Town Bank Mortgage annual sales rally or sales conference. That's the type of company I would work for, right? Like I said, that if I were to live in that market or want to get back into production, it would be with y'all. Y'all do an amazing job.
Thank you.
Really do.
Yeah. It's a great company. They really focus on the loan officer. And I know a lot of organizations say that, like, we focus on the salesperson, we focus on the loan officer, but they do it in a different way. It's a much more personable approach where you feel like they care about you.
Well, I got that sense. 100% I got that sense. Starting at the top.
Yeah, all the way from the top.
But at the top, you have a fiery leader who has a huge heart.
Yeah.
Tiny body, but huge heart.
Yes.
Right? And then you meet the marketing team and you see how much they care. And a lot of people think, oh, it's a bank. And like, no, but it's not that type of bank. Like these are like, pardon my French, badass mortgage professionals who are sources of information, who are funding lots of volume, that are serving their communities. And you all just do it right. And obviously you're in multiple states because the company's out of Virginia and you're in North Carolina.
Right.
So I want to introduce the people to you. Like the way that I got to know you a little bit on that stage, but that left us saying, hey, we got to do more together. We need to introduce Phil to the T-Lop community, because you did fund last year $108 million. It was roughly 240 units.
Right.
Your pull through is 80%.
That's the minimum. So my actual pull through is 90 to 95.
Okay.
If it goes below to 80, we have a problem. It's like pump the brakes. We need to create a new process. It's not good.
Now, do you start judging pull through? We're going to talk more about this in a minute, but I'm just curious. Do you start judging pull through after the loan is apt, locked, and disclosed? Or is pull through like, no, that builder or that realtor called me, they gave me a phone number, they gave me a name, they gave me an email address, and as long as I have that information, 95% of the time, they're going to fund a loan with me?
No, it's a little deeper than that. It's a little deeper than that. So I base it on RESPA loan applications.
Cool.
So, and it's only with a contract. I do not submit TBDs. It's only when I have a contract, I have a full-blown loan application, means all the fields are filled out. You have all your documentation. then I RESPA the loan, submit it into ops. When I look at that, like you look at Encompass or your operation system of choice, whatever your company uses, there's all these great tools, but they can get really muddy and dirty, and you can't see really what you have or what's going on, because if you're not disciplined up front with your process, you could cloud the entire system and all the tools that any company will give you if you're not disciplined. And so for us up front, we really focus on making sure that we're submitting high quality loans into the operations center. And that from that submission, and the loan's not locked. This is just, again, full loan application, contract, RESPA, go.
Perfect. Okay.
That pull through from that point to closing is
all right.
90 to 95.
So you and I have a lot to unpack then, because I want to first start with how many leads are you generating and where are those leads coming from.
Mm-hmm.
I then want to say, how do you take a lead and then get them to take the next step, right? The next step is to be able to do the full-blown pre-approval.
Sure.
And then what are you doing to get that full-blown pre-approval into your pipeline? Because once they're in your pipeline, 95% are funding.
Yeah.
Right. You basically know take your pipeline,
right,
multiply it by 95%.
And that's
your volume. Multiply it by your comp. That's your income.
Absolutely.
So you have a process to first generate leads.
Yes.
Then convert them into a pre-approval. But you really need to push to convert them into, let me disclose this.
Right.
Because once it's been disclosed, you now basically have 95% of the time guaranteed income.
100%.
Cool.
You are correct.
We're going to unpack that. We're also going to learn about your journey and your story. I want the audience to learn what did you do early on that allows you to be where you're at? What are some mistakes you made early on that have shaped you, that you could shorten someone else's learning curve just by sharing that story? Hey, I did this. It didn't work out. I can save you a lot of trouble, a lot of money, a lot of heartache. Don't do what I did. But I also want them to hear, do more of what I did.
Sure.
And then we'll kind of lead into the more techie, geeky stuff. And at the end, I'm going to ask you to maybe wrap it up with either like one piece of advice that you have taught your daughters, which you have 4 of them.
4 of them.
Right? Ranging
from 5 all the way to 21.
Yep. So from 5 to 21. What's some piece of advice that you've now given them that maybe wasn't given to you, as well as maybe your favorite book? So that's how we're going to wrap things up. But real quick, we're going to take a quick pause or a break so we can listen and hear from today's show sponsor. Check this out.
TLOP Unite is not your typical mortgage event. This is the first ever TLOP cruise experience built exclusively for originators. And for 4 days, it's not about the speakers, it's about you. We're talking breakout strategy sessions, real conversations, curated events, and uninterrupted access to a community that helps you grow. If you're serious about taking your career to the next level, this is where you need to be. Space is limited and the price is right. So click the link now and learn more.
All right, so we're back. So Phil, I want to start here. You started as a bank teller.
Started as a bank teller.
Then became a loan officer.
Then became a loan officer.
Okay, walk us through it. Like, give us the 90-second elevator rundown of how exactly this happened.
Absolutely. I'll never forget it. It was like yesterday when it happened. I was a bank teller, got a work permit in 1996. And
work permit because you were under 18.
Because I was under 18.
Okay.
And so I would walk to the bank from after school and work the teller line. And there was this guy that would come into the bank every day. He wore a nice suit. He was well dressed. Obviously, he's very successful. He drove an M5 BMW,
yeah.
Beautiful. I'm like, what does this guy do? Right? You're at home, living, with your parents, and you're thinking like, I got to get out of this house and get my own place, and like, I need to start getting it in life. And so I wanted to learn what this guy did. He was a loan officer. His name was George Dietrich.
Is he still in the business?
He's still in the business.
What's up, George?
What's up, George?
Yeah.
And so anyway, I had an opportunity one summer to be a personal banker, which was the same thing as a teller, except you were sitting down opening checking accounts versus making deposits. And they ran a promotion where you filled out an application for a home equity line of credit, kicked it to a loan officer, and you got a $20 referral fee.
And you're thinking $20 is $20. Let's go.
$20. If I could make a couple $100 a week or I
And
was
back
like,
then, you were probably making $8, $9 an hour.
it was like $7 an hour.
Yeah.
It was nothing,
Yeah.
right? Like you'd work a whole month and you got a couple $100. And so for me, I thought I hit the jackpot. Like I'm going to be rich. So I was just rolling these second mortgage applications to the loan department, and I started getting some attention from loan officers over there, and they were like, you should be a loan officer. I'm like, that's exactly what I want to be. That's why I'm pushing these loans over to prove myself. But I met with the management team, and they wouldn't hire me initially because I was 18 at the time. And so I called one of my buddies. His mom was a big real estate agent. I'm originally from Chicago. And she called the CEO of the bank at the time and was like, basically gave me a plug.
Okay.
Kind of talked with him for a little bit. The next day, they call me up and they're like, hey, we want you to come back in. We want to interview you. And
was that you thinking outside the box? You're like, look,
100%.
I'm not getting their attention. What would get their attention?
Yeah, well,
Good for you.
I was like, you know what? I know that, in order to get these mortgage loans, you need realtors to support you.
Yeah.
And she was a successful real estate agent in the Chicagoland area. And so I'm not really sure what she said to the CEO of the bank, but they rolled out the red carpet for me the next day.
There's a lesson to be learned in here. So I do so much for our industry because, like you, I love it. I love what it's done for me, my family, and my kids. Heck, the grandkids I don't have yet. The mortgage industry has already shaped their lives.
Yeah.
And they don't even know it because they're not born. And I tell originators all the time, especially those that are younger and newer, I go, look, the opportunity you want, you will not find on Indeed. You won't find it posted on a job board.
Right.
The opportunity you want, you're going to have to advocate for. You're going to have to go out and hustle. But don't worry, because that's going to be your job.
Right.
Your job when you become one of these full-time, whether you're a broker or a banker, you work at a credit union, is you have to get out there and hustle and become well-known, and you have to stand out in a crowd of others. You at 18 stood out in a crowd of others first because you were like Mr. HELOC credit app guy.
Yeah.
And then second, because when someone told you no, you didn't stop.
No.
You're like, wait a minute. Okay, I'm just not catching their attention. What
Right.
would?
Yeah.
Okay, I'm going to have my best friend's mom, who's a top realtor, basically call my boss's boss's boss and advocate for me.
Right.
And then bam, you became an originator at 18.
At 18, but they kept me because I was a liability. So they kept me in the back office. So I worked directly with the underwriting manager, the processing manager, the closing manager.
Oh.
I worked with the secondary, head of secondary.
So they almost put you through a bit of like an apprenticeship.
A little bit out of their own probably insecurity of having me out there slinging loans.
It's funny. You and I are pretty close to the same age, and I'm thinking at 47, I bet there's still people that think I'm a liability. They're like, "Ooh, I don't know if I can wind that guy up and let him go. He could be a
Right.
bit of a liability."
Right.
So then, at what point did they allow you to start hitting the street and building relationships?
It was immediately right
okay.
off, right out of the gate. But I just
And was this in Raleigh or was this in Chicago?
This was in Chicago.
Oh, this is in Chicago back
Yeah,
then,
this
because
is
you're graduating high school in Chicago.
Yes.
You're working for this bank in Chicago.
Yes, Mid-America Bank.
Okay. What part of Chicago?
It was Hinsdale,
Where's
southwest
north,
suburbs.
Southwest. Like, is that like heading to like Tenley Park in Frankfurt, or is that even further?
No. It'd be a little bit north of that.
A little bit north of
Yeah.
that. I have family there, so
Yeah,
shout out
okay.
to my family in Tenley Park and
Shout
Frankfurt.
out to Tinley Park.
There we
Tinley
go.
Park has got big loan amounts at Tinley Park.
Yeah, that's kind of where like all the suburban, dual income, white collar job people
Yes.
are all starting to go.
Mm-hmm.
But okay, so you're in Chicago. You weren't yet in Raleigh.
Correct.
And then they let you start originating
Yeah.
out in the street.
Yes.
Again, at what age were you?
18.
Oh, okay. So although you had to do back office, you still were hitting the street.
Yeah, I mean, anytime I talked to a customer, they wanted to know about it. Whenever I had a loan file, obviously, I immediately brought it in, and had to work through that loan file with everybody.
How long until you started funding consistently 5, 6, 7 loans a month?
Ooh, that probably took me 12 to 24 months.
Yeah. I mean, here's why I love this answer. This is late 90s, early 2000s. You're 18 years old, which I would say when you're 18, you're at a disadvantage compared to someone who's 26. And someone who's 26 at a disadvantage to someone who's 36 if aptitude and drive was all the same.
Right.
Because at some point, people want to see, do you have life experience?
Right.
And at 18, you just don't. I don't care how smart you are, how hard you work, but it still took you 2 years. I would tell a 36-year-old in 2026, it's going to take you 2 years. Like,
Absolutely.
yeah. Okay. So it took you about 12 to 24 months.
Mm-hmm.
Looking back 20 plus years into your career, what's one thing that you did really well that if your daughters were going to break into the mortgage industry, you would make them go do that same exact thing?
Stand up every time you fall down.
You did that really well at 18 and 19.
And we talk about this, all the time. My daughter just went to DC this weekend for an internship, and literally I just told her that. Now remember, I said falling down is a part of life. It only matters if you can stand up. You need to welcome falling down and tripping. That is normal. That is, if you're not falling down and you're not tripping, you're not doing something right.
So phenomenal mindset. How about tactical? What's something you did tactically that, again, late 90s, early 2000s,
consistency. You have to be consistent. Consistency is more important than content.
Okay.
Because people are so absorbed in their own lives that it's the consistency that creates an imprint in their minds. It's not necessarily, and the content might hook them for something, but then that consistency of it again and again and again is, I think, a huge tactic in anything that you do in life.
Back then, was your business purchase or refi?
It was all purchase. I've always been a purchase guy. I've never done more than 10 million a year, 5 to 10 million a year in refinances ever.
Yeah, which for those doing math at home, at most 20% of your business, at the least 5% of your business.
I'd say 2 to 5% of
Wow.
the business was refi. Even in 2020 when like everybody was successful.
Yeah.
I still didn't do any refis.
It's funny, in 2020, 2021, I had two different types of coaching students back then. I either had the student that I was begging them to go do more refis. That would have been you. I'm like, yes, I know you're killing it. I know you're doing 150 million, but I go, you're leaving money on the table.
Right.
Let's go hire you a junior. Let's put together a marketing strategy so that at least 20% of your business will be refi.
Right.
But then I had those coaching students where I saw like 50, 60% of their business was refi.
Yeah.
And I'm freaking the F out. I'm like,
Yeah.
we cannot have this much of your
The
business.
merry-go-round stops, and then it's scary.
Yeah. Okay, so you were purchase focused early on out of the gates. Were you focused on realtors or builders or financial advisors?
I was focused on realtors and builders, primarily builders.
Even then?
Even then. There was another role model for me. And this guy was the #1 producer at the bank. And he would come in. He kind of officed out of every location of the bank because he had builder business. And I was like, I need to learn what this guy's doing. So I went up and started talking to him. His name's Jim Ebley. He's a divisional manager at Rate.
Oh,
right
what's
now.
up, Jim?
What's up, Jim? And
I actually may have gone to the Masters with Jim.
really,
True story. Thanks to our friends at Arch MI. Back in the day, I was working at Waterstone Mortgage, running
Okay.
their entire Eastern Division. And I was invited to go to the Masters, and I was there with like 3 or 4 guys from Rate.
Yeah.
And I think Jim may have been one of the guys.
he's
If
like
that's-
one of the masters in new construction.
Okay.
Yeah,
Okay.
like he wrote the new construction playbook.
So you learned under him.
I learned under him. Absolutely. I saw everything he did. I followed his philosophies. I, incorporated a lot of consistency into, my sales strategy with builders, and it's paid off.
So when did you move to Raleigh then?
I moved to Raleigh in 2003.
Okay, so you were still fairly young.
Yeah.
But I'm guessing when you moved to Raleigh, you had to almost reinvent yourself.
100%. That was actually one of the drivers for me in moving to Raleigh. Was I had a lot of support in the Chicagoland area. I had mentors. I had opportunities that were given to me with builder accounts. And so for me, moving to Raleigh, it was a great way for me to almost create some fulfillment in myself, in my own ability to be able to go out and take what I've learned and implement it 100% on my own.
Yeah, but in a way, you had to start over.
Yeah,
mean-
was driving me.
That was driving you. You wanted that.
I wanted that.
You wanted that. So roughly 70 to 80% of your business does come from home builders.
Yes.
And what's cool about it is not like you're doing construction lending.
Right.
These are all N loans.
These are all N loans. These are not CP loans.
Yep. So you're doing FHA, VA, conventional, and your USDA and your standard jumbos.
Yep, you got it.
Yep. And you built those relationships yourself.
Yes, 100%.
So if you're talking to the next you, right, you're taking the advice that maybe you got from Jim.
Mm-hmm.
It worked for Jim in Chicago, worked for you in Chicago. Now it's working for you in Raleigh.
Mm-hmm.
How did you establish yourself as a builder's lender when so many builders have their in-house lenders and so many builders, are wanting to work with banks that are only giving them spec money?
Mm-hmm.
I mean, builders to me have always been if you can get one, oh, buddy, how amazing is it going to be for you and them? However, getting them isn't an easy feat. It's way easier for me to hit an open house on a Saturday and pick up a new real estate agent and start getting referrals by next week or next 2 weeks. Whereas home builders, I have found it may be, at least my experience here in Central Florida, 3, 6, 9 months of soliciting, of showing up before I start getting even referrals. What does that playbook look like to you?
Sure. It's not a quick process. And I always, when I'm talking to other loan officers and peers in the industry, I always tell people that you need to celebrate your small wins. Because if you don't celebrate your small wins, the big, home runs never come, and you get burnt out. You get fatigued. And so, what are small wins? Small wins are the little milestones along the way that get you closer. It's the little inches along the way that get you closer to that finish line. So if you actually get out there and make sales calls this week, that's a win. Celebrate it. You got dressed, you got out of your office, you got in front of folks, you made conversations happen. What did you take away from those conversations? Where can you identify a gap in value? Where can you add value to that person that you're talking to? And really, truly focusing on that person that you're talking to and listening to what they're saying. Because if you can add value to them and you can be consistent, you can hit those milestones along the way.
How are you adding value to your current builders? Or better yet, if you were to go solicit a brand new relationship with a builder who's not already working with you, what does value look like in 2026?
Loan officers, if 2026 is going to be your breakout year, this matters. Most originators don't struggle because of rates. They struggle because they don't have systems, structure, or accountability. I'm Coach Christy with TLOP's Originator Coaching. Originator Launch is a 16-week small group coaching program designed to help you build a real business, not just close the next loan. You'll get weekly live coaching, proven scripts used by top producers, real accountability, homework that actually moves the needle, and 2 private one-on-one calls with your coach. This program is capped at just 10 originators, so the attention is personal and the results are real. This isn't a course you watch. It's coaching you execute. If you're ready to stop guessing and start building with intention, apply now. Spots are limited, and once they're gone, enrollment closes. Register today.
That's going to be different for every builder that you talk to, every realtor that you talk to, because everybody runs and manages their business differently. And so for one person, the value might be some organization around the top of the sales funnel. Another person, it just might be, better loan programs and or ability to structure loans to convert more deals into closings. So it just depends on who you're talking to. But my biggest value add is that anyone who is working with myself in Town Bank, we help you sell more homes, period. You sell more houses working with us than you will any other bank or mortgage company in the country. And that's why our referral partners stick with us. And they know it because some of the best relationships we have are ones that might have dated somebody else. And they realized, whoa, there's other things. Like one of the biggest pieces of feedback I get is from that dating someone else. So there's some referral partners that are on-site sales agents, and for 6, 7, 8, 9, 10 months, even though you get a builder account, that's just one part of it. You still have 10 sales agents or 15 sales agents to win over.
Yeah, that's step one.
That's step
that's
one.
Step one. Yeah.
Like, and that's year one.
Yeah.
Right. So then the next step is you got to win over the sales agents, and the feedback from the sales agents are the value that you provide is so deep across the board when generating sales that it's difficult to really understand until you have it and it gets taken away, or you've never had it and then you start experiencing it.
So, and I'm guessing value is probably 10 of 30 things it could be, and value probably changes from one sales rep to the other sales rep. But is value as simple as accessibility?
Value is accessibility. It's simple things, following up, showing urgency, education with the customer, the overall feedback and experience, converting deals, limited cancellations, focusing back on that pull through, right? That's really the North Star of our business is pull through. It bleeds into every category of anything that we could potentially talk about.
Because are you doing anything to drive traffic to your home builders?
No.
Okay. Are you doing anything that makes it financially in their best interest to refer you? Like, do you have any MSAs with them?
No joint ventures, no MSAs. We don't sponsor stuff. We don't pay for things.
Is Town Bank giving them their spec money to build or their lines of credit to build?
No.
And the reason why I'm asking this, I know the answers, guys. However, I know what it's also like to be you, whether you're listening on Spotify, listening on Apple, or you're watching us on YouTube right now.
Right.
You're sitting there thinking, yeah, but there's something he's not telling us. Or, of course, he's doing this because he's probably doing X, Y, and Z.
Right.
And by the way, I personally have no issue with joint ventures. I have no issue with MSAs. However, when you get a Phil Jawny in the room and you realize that it can be done without those things.
Absolutely.
It gives all of us hope. It gives all of us that you don't necessarily need to go enter into a financial relationship to fund $60, $70, $80 million a year in volume. It truly does come down to, are you damn good at what you do?
Yeah.
Do you focus on making sure their needs are met? And their needs are accountability, their needs are speed, their needs are like you actually doing what you say you're going to do.
You have to be disciplined. The entire process is focused on being disciplined up front and making sure that, we take the philosophy garbage in, garbage out. And we don't focus on anything other than a high quality loan application. When a customer comes in, we want to understand, this is a little bit of, what sets us aside in the initial intake. We put a priority on that customer up front. We keep the momentum going. We want to make sure that that customer knows that we care about them. So anytime we talk to a customer, clients call, they want to know immediately, what's your rate? What's your closing cost? What makes you different? What are your incentives? What is everything about you that can add value to me? That's all the customer cares about. And so up front, I like to flip that script a little bit and jump in the driver's seat of focusing on the client by asking them before we get into anything, tell me the top 3 priorities you have in purchasing a home or refinancing. Give me your top 3 priorities, because the first 1 or 2 are always going to be the common rate, closing costs, payment, whatever. But the third one is going to be something that you can hang on to and leverage through mini trial closes, micro commitments along the way up front, to where we focus on manufacturing funded loans. That's it. And so when we focus on these little trial closes up front by understanding what's important to the customer, it allows us to really leverage and keep momentum going. If you lose momentum, the loss of momentum equals borrowers that are shopping rates. So you must keep that momentum going. Momentum creates loyal clients.
I love this. I bet you and your team are phenomenal at the next step is. And the next step is this, because everyone's going to ask us about rates and fees.
Right.
And for all of us, and I don't need to talk about town, or I need to talk about rate, or anywhere that you worked prior to where you work now, I'm going to guess you've always had Competitive rates, but never the best.
Never the best.
You've always had competitive fees, but never the best.
Never the
By
best.
the way, that's all of us. That's why I can say that. It's all of us
Right.
have never had the best rate in town. You don't want to have the best rate in town. And your client doesn't want you having the best rate in town. But you have to be able to overcome that. But you mentioned the micro closes. Can you give me an example of a micro close?
Sure, I absolutely can. So up front, so if I'm talking to you and I say, Dustin, tell me, what are the top 3 things that are most important to you about this loan process?
And I would tell you, because I'm a pretty unbearable client, but I'm an honest client.
Sure.
So I say, look, for me, all I care about is value. Value. Don't screw me over and take great care of me. My wife is nervous the whole time. She's afraid that we're going to make the worst financial decision, and I need her to be able to sleep good at night.
So it sounds like financial commitment is something that you take very seriously.
100%, yes.
Great. That right there is a label. So I use a Chris Voss sales
Love
strategy.
Love me some,
Right?
never split the difference.
Never
Yes.
split the difference. So if you don't have a sales coach and you're not following a sales process, that's your first step.
Yeah, go read the book. Chris Voss is the author. The book is called Never Split the Difference. Okay.
So you want to label that. Immediately, once you label something, then you imprint in their mind, I'm listening to you. What you're saying to me is important, right? And then I'm going to go into something like, so what I understand is, Dustin, that if we can make sure that you're making the best financial decision by reviewing a couple different loan options that fit your long-term and short-term goals, that would make you comfortable in moving forward with us as a lender.
Yes.
Boom, mini trial close right there.
Yeah.
That's how it's done. You do those little commitments, right? Is that fair?
Yes.
Boom, just did it again to you, right?
Yeah.
Those are mini commitments along the way. I am psychologically wiring your brain to follow me. And I'm doing that up front at that initial engagement because momentum creates loyalty. And if you talk to a client up front and you give them immediately everything that they're asking you for, your leverage is off the table. You're no longer needed. And so client comes in, they want to know, can I get a fee sheet? Sure, but here's all these things you're going to have to do to get a fee sheet. You need to value yourself and your team and your ability to truly, to your point, add value. Value means something. It doesn't just mean I'm going to roll over and give you any and everything you want out of the gate. You're going to invest in me, and I'm going to invest in you. Law of physics, right? Things that come together quick get pulled apart quick. Things that take time to come together take time to pull apart. And so put in that extra time, that extra discipline up front with that initial loan application. And these things like higher pull-through, higher volume, higher income, better customer service, better loan quality, those things naturally flow with that type of discipline up front.
Y'all, this is gold. Like, if you ever want to hear the difference between good and great, this is what great sounds like. And by the way, great got into the business at 18 after high school.
Right.
Great wasn't born with it. Great didn't go to some fancy university to get some fancy degree.
Right.
Great's just like, look, I started by being consistent, and then along the way, I focused on getting 1% better per day. A little James Clear, Atomic Habits, for those who are looking for a second book recommendation. That right there, Phil, was worth the entire episode. I want to ask you this, though. You mentioned to me when we were in the green room getting ready for today.
Yes.
Right? By the green room basically means like the lobby right outside of my office. When we're asking Phil if he wants anything to drink or he wants any granola bars that we have recently stocked because my wife went to Publix and hooked us up. But nonetheless, you're in the green room and you and I are doing our pre-recording session. And you mentioned something along the lines of, I don't pay realtors to refer me. They pay me.
Yeah.
Okay, unpack that. Like, again, the 90-second version of unpacking that. What do you mean by that?
Sure. So to start, you have to bring value to that transaction in helping that referral source close more homes, right? Sell more homes. Everyone knows that. But I think people use that as a soundbite versus an actual true North Star. Like, what are you doing to help me sell more homes, right?
Yeah.
How are you doing that? And so is it one magic bullet or is it a gamut of multiple things? And so, for me, I like to look at some of these real estate agents or on-site sales agents, and when you have the best in the industry selling houses, from an on-site sales agent to a realtor, as the owner of that company, if you are, let's say, a home builder, and you have a community on the corner of 123 Street, and there's another builder on the corner of 123 Street, you both are equal in product, pricing, value, but Builder A is selling way more than Builder B. Why? Because Builder A has a closer out on site that understands a sale process, has the discipline to stick to the sale process. As salespeople, one of the things that drive us all is that shot of adrenaline. When we get a loan application that comes in the door, it's like a shot of adrenaline. When we get a deal, when we get a realtor or a builder that calls us with something, it's a shot of adrenaline. After that shot of adrenaline, it kind of fizzles out. That's just the real shotgun start. That's the pistol start of the loan process, not the end. And so many loan officers go wrong because that pistol start for them is the finish line. And that's where they start losing deals, because they lose the momentum. So when you say, how do you create a situation where the referral source is paying you, it's making sure that you can identify these areas. Because if you're a builder or a realtor and you're getting outperformed in a community, and you see, hey, that sales agent is a better sales agent than the one I have. Oh, but then I found out that sales agent across the street, they're so good, but they're actually making an extra 1/4 of a point commission or an extra 1/8 of a point commission. If you could sell an extra 3 homes, would you pay an extra 1/4 point commission to get that salesperson on your team? Hell yeah, you would. Absolutely. Anybody would.
Yeah.
I'm that guy. And so if you want me on your team, I'm going to come and work my butt off for you, but you're going to pay me to come work for you.
Yeah,
I'm not going to show up and make sure you sell more houses and then pay you on top of that. I mean,
You're
think of how crazy.
I'm not going to do your Zillow. I'm not going to do an MSA.
I'm not doing Zillow.
I'm not going to open up a satellite branch and give you half the P&L on the loans that fund
I see
through
this.
there.
I see this model going. There's a mortgage company right now that is pushing really hard for these broker agreements and MSAs.
Lots of them.
And as a mortgage company, I get it. I think it's great to lock that up, but those deals don't work and you don't sell as many houses. And point in case, I just got a very large builder just last week that called me. I didn't even go out to get them, called me and said, we need you.
Yeah.
We need you on the team. We got into this agreement. It's a broker deal with a lender, and they put a fancy spreadsheet together of how much money we're going to make.
Yeah.
And what we didn't account for is how many sales we were going to lose. And I said, great, I'd love to come back and go to work for you, but here's my requirements on incentives and deal structure that is going to help me sell more houses for you. And boom, let's sit down and talk about it. They agreed to it, and now we've got an incentive package that's going to make sure that client is not going to waste my time by creating a rock fight in front of the house. In today's environment, buyers lack urgency. People are scared. Society is different than it was in our entire 20-year history of real estate. Right now, you need something different than what used to be the conventional way of selling mortgages or homes. Right now, you need...
If you're a licensed originator who's closing loans, but you're not consistent, this is for you. If you're brand new or just looking for motivation, trust me, this is not for you. Most LOs don't need more information. They need structure. They need proven processes and somebody to hold them accountable. T-Lob's Originator Coaching gives you weekly live coaching, scripts top producers actually use, and step-by-step business systems you can implement immediately. Not someday, we're talking day one. You're not watching videos alone. You're executing in real time with other originators who take this seriously. Right now, you can try it free for 2 weeks. That's 2 full weeks for free. You'll sit in on live coaching calls. You'll get access to the frameworks and see exactly how top producers run their business. If it creates clarity, if it creates momentum, or even if it puts wins on the board, you keep going. If it doesn't, no worries, you can cancel. No pressure at all. Click the link, start the 2-week trial, and finally, build this like a business, not a side hustle.
A partnership at the top of the sales funnel to create urgency, to create conversion. Conversion leads to pipeline.
Yes.
Right? And then your pull-through leads to funded loans, and that's a revenue generator.
No, that's the one thing I'm pulling from this. Your one thing is the next step, right? I'm going to generate leads, but the next step.
Right.
The next step is I need to get you into my system.
Right.
Then the next step is I need to get you under contract.
Right.
Because then you know you have a 95% pull through.
Well, you have to keep that momentum. So when you say, do you pay these services? Absolutely not. Like, I'm not going to come to work and pay you to come to work.
Yeah.
You want me to come work for you? I'm coming to work for you. This is how that works, right? That's a mutually beneficial relationship that is going to be something that lasts a long time. And so when we look up front at this type of discipline with the loan process, it naturally drives higher pull-through rate for then the realtor, the builder. They then see that. The industry average cancellation rate in new construction is somewhere around 15%, 20%, right? That's a lot of builders would say that's a healthy can rate, because that means we're writing contracts. But if you can work with a builder where you're helping new contracts get across the finish line, and your can rate is 3%, 2%, that's a game changer. And once you experience that, then you believe and see the value. One of the biggest challenges sometimes is getting people to really believe how good the Kool-Aid is until they taste it.
Well, because it sounds too good to be true. And you're like, look, you got to taste it to experience it. We coach this at T-Lop's Originator Coaching more on the real estate side. And then you said this earlier, you have to help people win. You have to help people make more money. Right? A real estate agent to me is like a loan officer. For the most part, we're teenagers.
Yeah.
It's all about me.
Right.
And we want done for us.
Right.
So, and we don't know what to advocate for or ask for. So we may ask for, I need more leads, or we may ask for, I need money, I need an MSA, I need you to cover my Zillow. But you're teaching us, because you practice it, it's like, no, you don't need that. What you're really saying is, I want to make more money. I want to sell more homes.
Right.
I want to have a better schedule. I want to have a more consistent process. And you're able to come in and say, well, if you partner with me, I'm not going to pay you out of my pocket. I'm going to pay you with my performance.
Right.
That way we both win.
Right.
But here's what I will do. When that home buyer calls me, and like right now I'm in Central Florida, 20% of resale contracts are canceling. But all of a sudden, if you can figure out how to have only 5% of those resale contracts cancel,
right,
that realtor doesn't need your $500. They need, for when they work with you, 1 in 20 contracts cancel, not 1 in 5.
Exactly. When you look at the upfront part of the sale process, the discipline matters, okay? Your momentum is what's driving everything. Idled buyers become shopping buyers and become cancels because they don't have that next step. They're not focused on that next part of the process. And you always want to be creating momentum. Next step, check-ins with your micro closings, which is gaining commitment along the way. I need to slowly help you gain commitment with me and following my lead, because that's just putting you into my overall process. It's keeping that momentum going.
Yep.
Momentum is the key driver.
I love it. So let's do this. We'll find a way to put a bow on today's episode. If people want to get a hold of you, I want them to figure out how to get a hold of you. And then B, I do want to ask you that piece of advice and that book recommendation. I know we just threw out Never Split the Difference. So now,
sure, no,
now
I have a book. I have a book that I follow. Absolutely.
Cool. So let's do in no particular order. I'll let you choose.
Okay.
I want to hear about the advice that you raised your daughters with that maybe wasn't taught to you.
Right.
You learned it the hard way.
Right.
I do want a book recommendation, and I need the people to know how to follow you, how to connect with you, if they're ever curious to learn more from the book of Phil.
Sure. So I would say the advice for my daughters is what I shared earlier on the show, which is going to be, falling down is normal, standing up is what counts. And the amount of times that I still today fall down each week, each day, doesn't change. It's just the fact that I feel like that's normal. And get up, dust yourself off, and just continue to drive forward. Don't think the grass is greener. Don't think life is easier. Don't think that the discomfort is something that you can avoid. Discomfort is something you need to welcome. You need to be comfortable with discomfort. If you can master that, you can master anything that you do. The book,
coming from a six-time Ironman, who those men and women know what it means to be uncomfortable,
right,
and still finish. Okay,
correct.
Yeah, all right.
And then for the book, it's Diary of a CEO. And
who wrote it?
I think his name's Stephen Bartlett.
Okay.
And why I love Diary of a CEO is because it is a book that's driven off of 5 philosophies in life, okay? And here's those philosophies. It's about a game of filling your own bucket. And there's 5 buckets. Bucket number 1 is your knowledge. So what am I doing to fill my knowledge constantly? Bucket number 2 is your skill. What can I do with my knowledge? How good am I at implementing the knowledge that I have? Buckets 1 and 2 are something that no one can ever take away from you. And how much time are you allocating to filling those 2 buckets? Bucket number 3 is going to be your resources. Am I leveraging, using, learning new resources, growing resources? What does my resource pool look like? And then 4th is my network. What's my network look like? Am I growing my network? Am I meeting new people? Am I leveraging my network? How am I filling that bucket? And then 5 is, what do people say about you when you're not in the room? What is your reputation? And what are you doing to build that on a consistent basis? And the reason I love that book is because those 5 buckets all flood into each other. If you're doing one bucket, you're doing all buckets. And if you look at any obstacles or challenges, it's typically because that bucket is low and you need to fill it. And so spending time focusing on those 5 things will help grow you and elevate you just as a human in life.
Huge. I need to add that book to my reading list because I have not heard of that book, but I am due for a new book. I just finished Traction by Gino Wickman,
okay,
which I think for anyone running a branch or a team is a must read. I wish I read it 10 years ago. And then his follow-up is What the Heck is EOS, which is honestly what you should give to your teammates to read.
Right.
But I read it first. So now that I've read those 2, I'm looking for a 3rd book. So it sounds like it's going to be Diary of a CEO. Lastly, if people want to get a hold of you, what's the best way to, are you a social media guy, YouTube guy, LinkedIn guy, or just this is my email address. If there's ever anything I can do for you, reach out.
I'm a LinkedIn guy.
Okay.
So I'm on LinkedIn. You can just Phil Jawny. I think we've got a link here on the show that we could put up, but LinkedIn would probably be the best, easiest way. Email is phil@philjawny.com, phil@philjawny.com.
That's fantastic. Any chance I'm going to get you to come on the Caribbean Takeover cruise with us in September, Phil?
I am going to, this year.
It's this year.
I am in Italy for September, and then I'm going to
really?
Switzerland, and then coming back to Milan and coming home.
That is so cool. Well, for those tuning in, we're doing our first ever event this year.
Wow.
And we're doing a Caribbean Takeover event. So it's going to be 150 plus mortgage professionals on one of the largest cruise ships of the world. Wow. And we're heading to the Caribbean for, it's 4 days, 4 nights.
Beautiful.
Super affordable. I'm going to have guys like you on the main stage presenting and teaching. I'm going to have guys like you that are also doing breakout sessions. And it's all about mastermind and all about networking.
Okay.
Only 1 day of it is speakers. The other 3 days.
In the future, I'd love to go.
Well, you love the beach. I'm like, we're doing a private beach bash, Phil.
I mean, this is, we'll have to double check the dates.
Yeah, we're doing a private beach bash. We're doing.
End of September or beginning?
No, it's September 14th through 18th.
That might be possible.
Yeah. So
I'm coming back, I think, on the 12th.
Okay. So the people who are like, whoa, what is this? Go to our website, tloponline.com. The event's called Unite. It's going to be an annual event. This is the first time we're doing it, but it's TLOP Unite Caribbean Takeover. The website's tloponline.com. Y'all, that's all the time we have for you today. He's Phil Jawny. I'm Dustin Owen. You've just tuned in to the Loan Officer Podcast. If you've enjoyed today's episode and you're listening on Spotify or Apple, do us a favor, give us a 5-star review. That will tell the algorithm to tell more people that this content doesn't suck and that they too should tune in. If you haven't subscribed to our YouTube channel, you are missing out. Not only can you watch today's episode and actually see Phil and I in the studio doing our thing, but that same YouTube channel has over 400 additional pieces of content that are not podcast related. These are training videos. These are mortgage school. These are free coaching sessions. And if you're not subscribed on YouTube, you're missing out. Go to YouTube, type in the Loan Officer Podcast, or if you really want to get geeky and technical, we are at TLOP Entertainment on YouTube. He's Phil. I'm Dio. That's all the time we have for you today, but we do look forward to catching you on the next episode. Peace.